Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news the world is in a slowdown period as the globally large economies show signs of culminating. But we start today with some tough news. The overnight dairy auctions saw prices fall to a 2-year low, the 8th consecutive drop in these auctions. Apart from cheddar cheese, which made an unexpectedly large recovery, everything else fell, especially butter, which fell to a 2-year low in New Zealand dollar prices and a 3-year low in US dollar prices. Overall prices retreated 4.3% in US dollars and 5.4% in New Zealand dollars. Falls this large have not happened since mid-July 2024. Analysts had already trimmed their current season payout forecasts, and today's event may have them thinking about revisiting them again. Certainly the trend isn't positive. And the OECD says global economic growth will ease to 2.9% in 2026 from 3.2% in 2025, as tariffs, weak trade and geopolitical uncertainty weigh on activity. In the US, growth is projected to slow to 2% in 2025 and 1.7% in 2026. For China, they see economic growth of 5% in 2025 to weaken to 4.4% in 2026 and 4.3% in 2027. Consumption will be dampened by high precautionary savings there and the payback effect of the now winding down of their trade-in program. For New Zealand, they said after contracting in 2024, our economy is expected to expand by 0.7% in 2025, 1.8% in 2026 and 2.8% in 2027. Growth will be supported by lower interest rates, improving household real incomes, buoyant tourism and firm commodity export earnings, they said. However, weak confidence, high energy costs, easing net immigration and elevated uncertainty surrounding trade restrictions are expected to remain headwinds to the near-term recovery. Inflation is projected to remain within the central bank's target band, easing towards 2%. They think the unemployment rate is projected to decline from its peak in 2025. For Australia, they said economic growth is now strengthening and becoming more private sector driven. GDP growth is projected to quicken to 2.3% in 2026 and 2027, up from 1.8% in 2025. This is consistent with a gradual closing of the small negative outward gap, keeping unemployment low while allowing inflation to remain close to target. Risks are balanced, they said, with downside risks from a greater than expected softening of labour market conditions, while on the upside, strengthening disposable incomes could bring a faster acceleration of private consumption. The signals in the US were not as negative today. The Real Clear Markets TIPP Economic Optimism Index recovered in December from its sharp November dip. But to be fair, this only returns it to the below average levels it reported from March to October. But that rebound was not seen in the logistics sector. The Logistics Manager Index eased back to its slowest growth in the sector since June 2024. The slowdown is driven by a continued softening of inventory and warehousing metrics, but tempered by some expansion in transportation. Warehousing utilisation contracted for the first time in the 9-year history of this index. However, by some accounts, the US holiday retail activity was strong, especially for online trade. Shoppers there spent $14 billion online on Cyber Monday, pushing online total sales over the Thanksgiving weekend to $44 billion. Spending rose 7.7% during the so-called Cyber Week, the 5 days from Thanksgiving to Cyber Monday. Across the Pacific, Japanese consumer confidence rose sharply in November from October to its best level since April 2024, with all components improving. In the EU, inflation is running in their sweet spot. EU area consumer price inflation rose to 2.2% in November, up from 2.1% in October, and slightly above market expectations of 2.1%. Services inflation, however, accelerated to 3.5%, and its highest level since April, while energy prices declined at a slower pace. In Australia, and after a big September surge, October's residential building permit levels were expected to be tame by comparison, but in the event it was negative, and the September rise was revised lower. And that meant the annual level of consents to October were lower than a year ago, and its first year-on-year retreat since June 2024. The US Treasury 10-year yield is now at just under 4.10%, up 1 basis point from yesterday. And the price of gold will start today at $4,186 an ounce, down $47 from yesterday. Silver has held up at $58 an ounce. And American oil prices are 50 cents softer at just under $59 a barrel, while the international Brent price is now just over $62.50 a barrel. And we should note that natural gas prices dropped back yesterday after the prior day's surge. And the Kiwi dollar is now down 10 basis points from yesterday at just under 57.3 US cents. Against the Aussie, we're also down 10 basis points at 87.4 Australian cents. Against the euro, we've held at 49.4 euro cents. That all means our trade-weighted index starts today at just under 61.9 and little change from yesterday. And the Bitcoin price starts today at $90,852 and recovering 6.4% from this time yesterday. Volatility over the past 24 hours has been high, though, at just on plus or minus 3.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.